You know, if you think the idea of fair is everybody gets the same thing no matter what they do, I think that's very unfair. Okay, right. But if that's your, it's equity versus equality, right? So that's equity. Equality is everybody that does the same thing gets the same thing. Right. So in the tax law, if two business owners doing the same thing the same way, it will get the same result. But if you don't do it the same way, then you're not getting the same result. I mean, I have business owners that I know the small business owners pay 60% tax. I have other small business owners that pay 0. It's just they're doing something different. Right. Okay. And they have better people too. I mean, that's part of it. You don't want to do this on your own. You really do need a good tax advisor. That's actually why we created the TFW Advisor franchise, was just because everywhere I go around the world, everywhere I go, number one question is, where do I find somebody who knows what you know? Yeah. That's what I get, because I can't do it all.
The next speaker, I used to read all of his books. I still read his books, and he happened to be speaking, and we ended up writing From Paycheck to Freedom, and it goes to the whole principle that everybody needs to get educated, and you got to learn from people that have smarts, so you can get into owning businesses and owning real estate. I mean, in my mind, everyone should own a side hustle or a business. Without further ado, our next speaker, Mr. Tom Wheelwright, CPA and co-author From Paycheck to Freedom. So thank you, Tom, for joining us.
Thanks, Beau. Thanks for letting me join you guys today. Thanks everybody for being here. I'm always fascinated that we have people still that are willing to spend time on a Saturday getting financial education. And I think that's fantastic. And thank you, Beau. Thank you to your team for putting this together. This is awesome. So I think mission's everything. Now, of course, I spent 2 years of my life doing nothing but mission. And I've spent the last 30 years of my life doing a different mission, which is helping people. Really, what we do is we help entrepreneurs raise capital from the government that they don't have to pay back. That's what we do, so that they can accomplish their mission. In fact, my CPA firm, our mission statement is we serve mission-driven entrepreneurs. That is our avatar, is mission-driven entrepreneurs. If you're just out there to make money, you're not even invited. You're not the client we're looking for. We're looking for the client who can serve other people, because we want to expand your reach. That's our job, is to expand your reach. What I love about tax is it's a game, and it is a game. But as with any game, if you're going to win the game, the most important thing is that you know the rules, and that you don't infer rules that are not there. That you don't infer rules that are not there, but that you know the rules. So the general rule in taxation in the US, and actually every other country I've been to, is all income is taxable unless they say it isn't. And nothing is deductible unless they say it is. So the general rule is there are no deductions. That is the general rule. So then the question is, okay, well, what makes something deductible? So Robert, one of my favorite books of Robert's was not Rich Dad Poor Dad's most popular book. Just to give you an idea of how popular Robert is, he sold over 66 million copies of his book. That's our target, Beau. That is our target, Beau. 66 million copies of our book. So I'm going to share my screen here so that I can kind of illustrate. Robert teaches in in his second book, Cashflow Quadrant. So if you look at basically how people make money, it's pretty simple. You can either make money as an employee, and you can make a lot of money as an employee. I mean, especially these days, CEO, football coach. I mean, there's all sorts of people who make a lot of money. You can make a lot of money as a small business. A lot of small business owners make a lot of money. Self-employed, right? An athlete, a doctor, a lawyer. Or you could make your money as a big business, or you could make your money as a inside investor. Okay, this isn't your stocks, bonds, and mutual fund. This is an inside investor. Those are the ways, really, when you think about it, there's really only those four ways to make money. What's interesting is I've traveled the world with Robert, I've figured out that how you make your money has a very big impact on how much tax you pay. If you make your money as an employee and you make a good wage, just like we were talking about, you're probably going to pay 40%. If you then get more education, become a doctor, lawyer, accountant, et cetera, then you get to pay 60%, because now you're paying both the employee share and the employer share. So you're paying both sides of the tax. So you're actually paying a higher rate of tax. Then as a big business owner, you end up in about a 20% tax bracket. This is exactly why Warren Buffett famously said that he pays less tax than his secretary, right? She's a high paid employee. He's a big business owner. Of course he pays less, from a tax rate, he pays less tax. Then as a professional investor, you can get it down to zero. And the question is, why? Why can you get it down to zero? And what's really interesting is if you are both a business owner and a professional investor, you can get this down to zero as well. Once again, if you are both a professional investor and a business owner, this is why what Beau says about you need to be a business owner. It is the number one tax break in the world, is being a business owner. Think about it. We all worked from home during COVID. Every one of us worked from home during COVID. And so we all had a home office. Well, guess what? If you were an employee, you didn't get to deduct anything for having that home office. But if you were a business owner, you did. So the tax law just favors the business owner. Why? It's really simple to understand when you think about it. What does the government want done? Remember that the tax law is fundamentally a series of incentives. It's fundamentally a series of incentives. Now, what do they want done? Well, they want jobs created. They want technology created. That's primarily the big businesses and that's probably primarily big businesses. They also, though, want food, housing, and energy. That's the professional investor. The professional investor does not invest in a derivative. A stock is a derivative of the business. The business is the asset. The stock is just a derivative. It's like orange juice is a derivative of an orange, right? The stock is just a derivative of the business. The business itself, that's actually here. And if you understand how to do what these guys do over here. So if you want, you can either go from here to here, or you can behave like these guys do. Great thing about laws in the US, we have what's called equal protection under the Constitution. What the Equal Protection Clause means fundamentally is that every person doing the same thing in the same way gets the same result under the law. That means that you don't have to be big to get the tax results of the big business. You don't have to be big to get the tax results of the inside investor. You just have to do it the way they do it. So you do need, small businesses, they do create jobs. So they get some tax benefit for creating the jobs. But what if you not only had your business, but you also invested? So now we're talking about not how you make your money, but what you do with the money you make. See, that's the second question that you have to ask, that I always ask a client is, first is, how do you make your money? Because of course, now, you see the tax rates. I mean, if you make your money as a professional investor, when President Trump's tax returns were released, illegally, by the way, a number of years ago, I looked at him, but I also was doing interview after interview about this. And I'm going, he would have to have the dumbest accountant in the world to pay tax. Seriously, what does he do? He's a big business and professional investor. He's here and here. How would he ever pay tax with the amount of real estate and debt that he has? It would literally be practically impossible. I mean, you'd really have to have a really stupid accountant. Okay, now he actually could have had a better accountant because I looked at those tax returns. Nevertheless, he said, well, he only paid $750. And I said, that's the problem. He paid $750. He shouldn't have paid anything. So, and actually the year after his tax returns were released, he actually paid some tax. I actually figured that out from the previous tax returns. But in any case, here's what happens. There are both tax efficient investments, which is how we get to zero here. And there's tax effective investments, which is how we get to here. See, a tax efficient investment, take that $10,000. It's like a Roth IRA. Okay, so everybody knows what a Roth IRA is. You put $10,000 into a Roth IRA and you don't pay tax on the earnings. But there's no tax benefit from on your other taxes. You get no benefit from your other income, other taxes from investing in a Roth IRA. There's no deduction for a Roth IRA. Now, here's the cool thing about these investments: housing, energy, food. What's cool about these investments is, and I'm talking about the actual investment, you're investing in the oil well, you're investing in the solar, you're investing panels, you're investing in the actual housing development, you're investing in the farm or the ranch, right? When you're actually investing in those things the government wants us to do, what happens is the government actually pays for part of the investment. And how do they do that? They do it by giving you a deduction for your investment. Okay, I'll give you a quick example. And how much time do I have still, Beau?
10.
10 minutes plus.
10 minutes.
Yeah.
No problem. No problem. Okay, so let me kind of walk you through this real quickly here. Like I said, you always have to look at the numbers. And the numbers should be in your financial statement. Your financial statements, your income, expense, your assets, and your liabilities. So with business, so here's the employee. If you're an employee, you earn money, you spend money, and you pay tax. So you pay tax if you either save it or spend it. If you're an employee, you pay tax. On the other hand, if you put it back, if you are a business owner and you earn the income and put it back into your business as an expense, you pay zero tax on that income. That's called a deduction. Now, let's say that you have money coming in, but instead you buy an asset. You actually buy a business. You buy, make an investment in real estate, or you make an investment in commodities, right? That would be your food, etc. You do that, then you also pay zero tax. But what's cool is that here's what's happening. You're earning money in your business, but you're actually investing in something that's going to give you a return on investment. That is very cool. That is very cool because you're actually increasing your net worth in addition to reducing your taxes. You're increasing your net worth in addition to reducing your taxes. So I'll give you a quick example. If you have, let's say you go out and you invest in a nice little residential rental property, okay? And you're going, okay, well, what's the big deal here? I mean, I've got expenses. So my net income is going to be taxable, right? No, not if you do it right, especially under our big, beautiful bill. Because what you're going to get is we're going to get what's called a deduction for depreciation. And depreciation is the wear and tear on the property. Well, here's the thing. Let's say I've got $1 million. Let's say I pay $1 million for, we'll call it a fourplex. I paid $1 million for it. All right. Okay. Well, how much deduction do I get on that $1 million? Well, under the big, beautiful bill, beginning this year, you're going to get about a $300,000 deduction. Called bonus depreciation if you do what's called a cost segregation. Now, $300,000, and by the way, you can read all of this in my first book, Tax-Free Wealth. So that's the, many of you may have read that before, but read it again because this is all in Tax-Free Wealth. But a $300,000 deduction, suppose I'm only in a 33% tax bracket. If you're making any kind of money, you're in a 33% tax bracket between federal and state. That means that you have a $100,000 tax benefit, right? Their government's actually giving you $100,000. Well, it's only 100,000 out of $1 million, right? Well, no, because if you do what Robert and I talk about, you're going to have an $800,000 loan. So your equity, so your down payment is only $200,000. What does that really mean? What does that really mean then? Well, you're not really putting down $200,000. Let's say you make 15% on this. Let's say you got a 15% return on investment. That's great. I get a 15% cash on cash return on my investment on my 200,000. But it's not really 15%, is it? Because you really didn't put in 200,000. You get to take off the 100,000 of tax benefit. You really only put it in $100,000 because the government put in $100,000. So now you get to multiply that by 2, and now your return on investment is 30%. Now start compounding that. Start compounding the 30%. And remember, this $100,000 tax benefit is a tax reduction on your business income. And guess what? If it's not business income and you're an employee, you're limited. So only business owners get this unlimited. Only business owners, to your point, Beau, everybody needs to be a business. That's the best way to make money. Even if you're a consultant, it still qualifies. You still can do it. And there's still things you can do. So my recommendation is do what Beau does. That's my recommendation.
I agree.
What would Beau do?
So basically, if you're a business owner and you also have W-2 income with bonus depreciation, if you set up the right entity, it can flow through to your personal tax returns and potentially offset some of that W-2 income. It can
offset some of it. In many cases, most of it, because for a married couple, you can offset up to $636,000 of wages this year. Okay, or single 313, half of that. So you can use a lot of it for your employment income, but you can use it's unlimited for business income.
That is phenomenal.
You know, my mission's education. It's Robert's mission, which is elevating the financial, the financial well-being of every person in the world, and that is the mission.
And I have a mission too, to help 1 million aspiring entrepreneurs get into owning a business successfully over the next 10 years.
I love that.
It's good to have a mission, right?
It's good. And I got to tell you, Beau, I think franchises, my experience with franchise so far I only wish that there had been a franchise like our franchise when I was starting my business, because it is easier. It's easier to grow. You never have to split your pie with anybody else, which is really great, because you can just have them, you have an employee come up, you can have them be a new franchisee, they can be a franchise, and you can just get part of their pie. So I love the growth opportunity. I love having all the systems in place, all the marketing in place. I mean, there's so many things in a franchise that you don't get anywhere else. So it's by far the easiest way to start a business is a franchise.
I agree 100%. So thank you for providing all that. Well, I'm excited. Thank you so much, Tom. I appreciate you joining us. I'll talk to you soon.
Happy to.
Yeah.
Anytime. Thanks, Beau.
Thank you.
Thank you,
Bye-bye.
guys. Bye.
See ya. If you're a solopreneur or small business owner, listen closely. Business growth isn't about working harder. It's about building smarter systems. It's about automation. And that's exactly what GoHighLevel helps you do. Build your funnel, automate your follow-up, manage your team, all in one place. Click the link below, activate your trial, and see how much more efficient, automated, and profitable your business can be in just 30 days. Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.